Chargepoint stock price prediction and news update. Okay guys, so in this video, a lot happened with Chargepoint and Switchback Energy yesterday. So the stock price absolutely tanked like within the first couple of hours of trading. And I actually saw an opportunity to kind of get in there and pick up a few shares or add to my position because I thought it was a nice dip buying opportunity. And the price actually recovered quite quickly, and now we're sitting at around $30. So there was a lot of I got a lot of feedback on my previous Chargepoint video where a lot of people were saying my $350 price target was completely bogus, that I was making it out of thin air. So I want to give you, I thought I explained it pretty well, but I need to kind of go back. And but first off, what I want to do is let's go over why Chargepoint is in such a good position, and we're going to get into a bit of technical analysis, and then I'm going to talk about ChargePoint's future revenue targets, and then go over how the merger is going to take place in December 15th, and then I'm going to wrap things up with the price prediction. So guys, let's start here. So this picture posted by Bloomberg New Energy Finance. If we take a look at this graph, we can see it talks about global electric car revolution is set to take off. So guys, I want you to visualize something. Now, if you could take a look here, we're currently in 2020. So this is where we were just 5 years ago. I'm pretty sure, companies like Tesla, probably a lot of you guys didn't even know what Tesla was. And if you knew about it, you were really early in the game. So this was kind of the beginning where global EV sales were kind of so minuscule. I mean, if you take a look at this graph, it's barely visible. And this is where we're headed to in 2040. So if you take a look here, we're right about here. So we're not even close to the major run-up. So one of the reasons why ChargePoint is such a good investment is simply because all of these vehicles around the world are going to need to be charged. Basically, ChargePoint and other EV charging stocks, Blink Charging, Nuve, even Tesla, all of these companies are going to benefit because people are going to need to charge their cars. So whether they're charging them at home, whether they're charging them on the go, whether they're charging them at work, whether they're charging them at restaurants, these vehicles will continuously need energy pumped into them in order to them to go. And as you can see here, this isn't something where we think sales are just going to be a few. Every year, sales are projected to increase. So what does this mean for ChargePoint? Well, let's take a look at their revenue now and their revenue that's going to be projected in the next couple of years. So you can actually find this information on their investor presentation, but I just found it on this article because I feel like it's just a little bit easier anyway. So if we take a look here, here's the slide from their presentation. Here we are now with ChargePoint's revenue. So it's around, let's say, $135 million for this year. Now, a lot of this growth was kind of hindered by the pandemic. And this is where growth is projected to be in 2026. So I want to do this again, guys. If we take a look at this chart, we're here and we're moving up. If we go back here, we are currently here and revenue is projected to move up. So if you take a close look, revenue is basically the chart on ChargePoint's revenue is basically growing as EV sales grow. So now let's take a look back at this chart. It's projected to be around $2 billion in revenue in 2026. So that would put us at this mark. So now how much bigger is the revenue in 2030 and in 2035 and in 2040? So if we're looking here at 2026, we can see that by 2030, that's about double. And then if we take the 2026 revenue, if we go to say 2035, that looks like it's about quadruple. And then if we look at from 2025 to 2040, this revenue, it looks like it's about 6 or 7 times as much. And remember now, these are all estimates. Numbers could increase even much faster because remember now, this is just electric cars. We're not talking about buses, trucks, tractors, vans, school buses. So this chart is really just talking about, I believe, passenger cars. All vehicles are going to have to be electrified. So really, this chart is a good example of the direction we're headed into. So now if we come back here, we can see that direction is trending up. So basically stocks are going to trade. Basically, a company cannot grow unless it's making revenue and turning that revenue into earnings. And then when a company earns earnings, that's when investors run to the stock market and purchase that stock because they want to receive those earnings in form of retained earnings or in form of dividends. Or, in cases like Amazon and stuff like that, they're going to take a lot of that earnings and reinvest it back into the business to grow the earnings, which continues to grow the stock price. So now if we come back down here and we take a look, we can see that their revenue breakdown is pretty well diversified. So it's basically in North America and in Europe and, Global Fleet and other companies. So this revenue is not just like they're just focused in America, they're not just focused in Europe, it's a diversified company. And it's highly likely that ChargePoint might expand to other parts of the world as well, perhaps Asia, Africa, Latin America, the Middle East. So these charts, like I said, are just projections, I think, and I expect the revenue to be much higher than this. $2 billion by 2026 seems extremely conservative. So now let's go back here and take a look at how the stock price has traded. So like I said, this was done via a SPAC deal. So SPACs usually start at around $10 and the stock has already run up a ton. So the reason why I believe there was a bit of a sell-off is I was looking at the relative strength index, the RSI, and you can see that the RSI was really high. So I'll show you guys. I like to look at the RSI on stock charts. So we head over to stock charts. We can see here that the RSI was extremely high here, and then there was a massive sell-off. So where we are right here, we're not really at overbought, which would be over 70, and we're not really at oversold, which would be under 30. But if we take a look here, it's still gone. The stock is still moved from 10 to 30 in a couple of months. So it's unrealistic to think you're going to get like 1,000% returns every month. There's going to be run-ups, there's going to be pullbacks. So I think now is still a good time to get into a pullback, and I'm going to explain to you guys exactly why. And to explain this, we're going to do a little bit of math here. Okay, so I'm using my trusty Google calculator. So once the merger is complete on December 3rd, December 15th, we're going to have around 305 million shares total. So like I said, SBE stock, that is just a small portion of the shares outstanding. The majority of the shares are still owned by the private owners. And a lot of those private owners are big car companies. So you can bet if big car companies are investing a lot of money into this company, you can bet that they see something that a lot of people don't. And to give you guys some of those car owners, I can just head back to this page. It lists them here, I believe. Some of these owners that already own ChargePoint include Chevron, Daimler, BMW, Siemens, and Canada Pension Plan. So some big names in there, and obviously they know about the future growth of EV models. But to kind of get back to what I was talking about, so let's say that by December 15th, the stock is trading at $30, which is what it's trading at now. So if around 305 million shares, all I did was multiply 305 million times 30. So now we're looking at a potential market cap of about $1.5 billion. Obviously give or take a bit, but let's say 9 billion to make things much easier to think about. So if we're looking at a $9 billion market cap, that's kind of what the market cap will be at once ChargePoint officially changes into goes from Switchback Energy and officially goes to ChargePoint and starts trading under a different ticker symbol and everything like that. But the company was really affected by the pandemic, and revenue was at 135 million. So if I divide this number by 135 million, we can kind of take a look at what the price to sales ratio would be. So a pretty high price to sales ratio of around 67. But what I did was I realized that, a lot of those revenue numbers were kind of temporarily lowered due to the whole pandemic situation. So more conservative looking forward, we're probably looking closer towards a price to sales ratio of around 30 to 40. So now, where did I get that $350 price target for in the future? Well, I was looking at how revenue would be ramping up in the future. So let's say that this company maintains this price to sales ratio. I know it's a little bit high, but I think a lot of these stocks tend to trade at higher price to sales ratios, especially this one, because like I mentioned earlier, the pandemic hurt revenue in the short term. And why did I mention that? Well, if I go back to the presentation here, you can see that revenue was actually higher in 2019 projected. So this, if there wasn't the pandemic, this number would have been much higher. It probably would have been closer to 160, 170 million. So just kind of bear with me on this number. So now if we're looking at a price to sales ratio of 67, the reason why I'm not using price to earnings is because this company is not projected to have positive earnings until probably 2024 or 2025. So now if I look at this and I take a look and I multiply this, now we take a look at that projected future earnings of $2 billion by 2026, and then we multiply 67 times 2 billion, 1, 2, 3. So now that gives us a potential future market cap of like 135 billion, assuming the price to sales ratio just remains unchanged. It'll probably, obviously probably shrink, what my guess is, but let's just use the same price to sales ratio. So it's $135 billion market cap using these same numbers by 2026. So if we have $135 billion and then we divide that by 350 million shares, that would give us a stock price of actually $444. But the reason why I said $350 is because I remember I mentioned I expected the price to sales ratio to shrink. So that's why I used 350. It was kind of a conservative target. I expect that price to sales ratio not to remain at 67 forever. It's probably going to trickle down, as most of these companies do, as they become more mature. So like I said, that's where I got my price target from. I usually take whatever numbers that I find through calculations, and then I trim a bit off the top, because I know that these numbers aren't exact. But the point is that within the next few years, as you see this growth continue to accelerate, you're going to see Chargepoint's revenue accelerate with it. And it's exactly what we've seen with companies like Tesla. Tesla has had a lot of haters and things like that, but the revenue has just continued to skyrocket. So like I mentioned here, back to this math thing, let's say we're looking at a stock range of around 350 to, according to this number, $450 by 2026. Well, if we're basically here on this graph, there's a lot more growth ahead. So, ChargePoint is one of those companies, I think it's one of those decade opportunities. I follow a lot of stocks, and I've been looking at stocks for a long time, and rarely do I see companies that are just this well positioned. I mean, it ticks off all the boxes. It's basically a market leader. It's got a huge footprint all over North America and Europe. It's basically a very, very safe defensive play, and you're not buying, you don't have to worry about will Tesla make money. You don't have to worry about whether Fisker will make money. You just know that no matter which car people are buying, they have to charge it. So it's kind of one of the no-brainer safest plays I've seen in a long time. I wouldn't be surprised if by the end of the decade, ChargePoint was one of the best returning stocks from 2020 to 2030. I mean, I wouldn't, it just seems to tick off all the boxes, and it really takes a lot of the worry away, because you're not really worried about, if you're going to hit NIO, or you're going to hit on Tesla, or you're going to hit on Fisker or Lordstown. You just say, hey, people have to charge their car. I'm going to own ChargePoint. It's the biggest player in the country. Put your money in it and just go fishing or something like that. So that's the type of stocks that I'm looking to invest in. I'm looking to invest in companies. Obviously, I do own shares of Tesla, but I'm also looking to invest in companies that are kind of no-brainers. And this company, ChargePoint, falls under it. So like I said, guys, I hope I give you guys a more kind of thorough analysis of where that price target came from. So now to give you guys, wrap things up, I want to talk a little bit more about that technical analysis. So like I said, I've read to some of you guys have bought the stock at 40 perhaps, and you're kind of wondering what you can do. Be patient. This is not an opportunity you want to miss out on. And I don't say that much on this channel. If you guys have been following my channel ever since I started with like 100 subscribers earlier this year, you know that I've covered quite a few stocks. We've covered tech stocks on here, cannabis stocks, EV stocks, retail stocks, big tech, many things. Very rarely do I feel as strong and confident about a company as I do about ChargePoint. And yeah, so that's kind of my thought process on this company. I hope I cleared a lot of things up from that previous video for you guys that were saying some things in the comments. I hope I answered your questions. And like I said, guys, for me, I'm just going to be adding to my stake. I'm not really trying to trade in and out of this stock. One strategy you could use is you could go over the stock charts, and anytime you kind of see the RSI as really high, you could potentially try to sell. But the problem with the RSI is that the RSI was so high here, and then if you sold here, you missed out on the run up. So for me personally, obviously I dabble in options and things like that, but when it comes to long-term stocks, I'm basically a buy and hold investor. I've talked to many people over at Fidelity, and they say the clients that have performed the best have basically just bought their stocks and just held on to them for a long time. So that's the strategy I'm using for ChargePoint, not trying to trade in and out, or just trying to buy as many shares as I can on dips. So I hope I cleared up a lot of things on this video, guys. Please smash the like button if you enjoy my content. Smash the red subscribe button to receive more video updates from me. And also, are you subscribed to my daily watch list? I post a watch list of around 5 to 10 stocks every morning before the market opens Monday through Friday on my Substack. You can check that out by clicking the link in the description or going to investortrip.com/newsletter. So that's it until next time, guys.